Okay, we are officially going this morning. All right. Thank you all for bearing with us for a minute this morning. Today is March 16th, 2023. This is the monthly meeting of the Kingston Local Development Corporation. We are going to call this meeting to order at officially 8:11 a.m. We do have a quorum this morning, and so we're going to be able to jump right in and get started. So I think everybody has seen a copy of the agenda, and so we do have a couple of things that we need to take care of today. We also have a guest, and so we may move some things around on the agenda just to be able to make sure that we get to our guest first. So what we'll do is, let me just look at it, pull it up, make sure we're. What we can do is, if everyone's okay with it, we're going to just flip-flop Kevin with the treasurer's report, just so that we can have Kevin go first. And so Kevin is from Catskill Hudson Bank. He's here to discuss a municipal letter of credit and just explain to us what that means. It's something that, yeah. So Kevin, why don't you just feel free to give us a quick overview of, why it's being requested and what it is.
Thanks, Steve.
Yeah.
Good morning, and thanks, everybody. So, as we know, right, public funds need to be collateralized. The kind of traditional way is with securities, but there are other ways within state municipal law 10 that they can just as readily and acceptably to your accountants and to any of your stakeholders. And the primary way, other than securities, is with a municipal letter of credit, which was what I started speaking to Amanda about. And I know that she's spoken with Mr. Redder, who has blessed it. Essentially, what the letter of credit is, and thinking from a municipality standpoint, somebody's going to do a road, you may ask for a letter of credit. As you know, that letter of credit is essentially cash in your hand. Without question, right, you can go to the Federal Home Loan Bank and say, we want our money. Now, of course, you're not going to do that unless there's a reason. We're not going to give you that reason, okay, because we're going to do the right thing with our bank. But nonetheless, to maintain that safety of your deposits, which we're hugely appreciative of, by the way, the municipal letter of credit, quite frankly, what it does for us and for you, is it's fairly transparent to you. Probably one of the things is, from Amanda's perspective and for your accountants and outside auditors' perspective, is the letter is just simply, yep, we have, in your case, I think you have $1.5 million in CDs. We would do $1.5 million, probably, letter of credit. Okay, so that way you don't have to worry about securities. The accountants see the letter of credit from Federal Home Loan Bank, it's irrevocable, and they go, great, you're covered. It's that, so what it does for us is, as the bank, and we talked about lending earlier, right? As the bank grows and as our loan portfolio grows, quite frankly, the bank would rather invest in loans than in securities. So what this does is, this says, we don't need to have security to cover the $3 million and change that KLDC has with us. We'll give them a letter of credit. That frees up those securities. As they mature, we can take them off the shelf and put them into loans. So I don't want to get into everything that's happening in our industry right now, but there's a semi-panic, and that's driven by banks that are not doing these types of actions. They took inordinate risks. I was on a call yesterday, and somebody talked about the fact that it's not a liquidity issue. It's simply bad management. What this allows us to do, in my opinion, is more capably manage the bank for earnings while maintaining the safety of your deposit. So the process is very simple. We do these with some regularity for school districts, for municipalities. So it's a simple letter to the FHLB. We name the public entity. They create the letter of credit that day. Comes out, we get it, which I always forward out to the municipality, but original comes out to the municipality by mail from them. I think a couple of years ago, it's funny how things don't change quickly. They used to fax them. I think they stopped faxing them, but they do overnight it out. But we get it out right away. And then, the letter of credit can be for anywhere from, 2 weeks to 90 days. We roll them. And it's a fairly simple process that I think it sounds like everybody has, who needs to internally, your counsel and your, any accounting firm that you may use. It's important, but these will be business as usual for them. So I just always feel like because it's a change, because of the public nature of most of the entities that are getting these, that it's important that I just come and talk about it and make sure everybody's comfortable. And if you have any questions, feel free to ask or, anywhere along the process.
Are our deposits there, whether it's letter of credit or actual deposits, is it insured to a certain level?
No.
Because commercial deposits aren't.
Well, because they're public funds, let me.
Yep.
They're up to 250,000 FDIC covers. We cover them, so that's just like any account. Above that, because they're municipal funds, and again, that municipal law 10 says they have to be collateralized either by a security or a municipal letter of credit. There is one other way. I'm gonna leave a bunch of these. I don't want to dilute the conversation today because the MULOC is what we've been talking about. But there is one other way, and I'll leave these. And what that is, and I'm sure Paul will take this as treasurer and thoroughly digest it. And then I'll take a walk over and we'll talk about it someday. But in answer to your question, one of the other things that's really tangentially gets you FDIC insurance is IntraFi, which is a nationally recognized entity that basically takes primarily municipal funds, but it could be, your large customers.
Like Cedars?
It is Cedars. It's Cedars and ICS. So they're going to take, in this case, one of the things that may make sense, I didn't as much talk about IntraFi because you had primarily demand deposit accounts, you had primarily checkings and money markets. And when you open the CDs, IntraFi might be a good alternative for that. Again, I don't want to veer too wildly away from the MULOC discussion, so I can make sure everybody's comfortable with that. But well, that could be something also that we should look at, because that just takes those CDs in $250,000 blocks, sends them out to another bank, right? Who obviously you don't have a relationship with. You get coverage right away on that 250,000. In that case, you don't need a MULOC. You have that. You get a very simple statement from them telling you these are the banks that your money is in. So another alternative.
And those rates and terms are based on your rates and terms?
Correct. What I would tell you is that I know you just did the CDs, and they're 11-month CDs. The way IntraFi works is they and I don't want to create a lot of churn for everybody because I know you're busy, but we can make this fairly painless. They only work in kind of round increments, so 4 weeks, 12 weeks, 26, 52. So if you wanted to go if this is something you want to talk more about, that's fine. We could just take that 11-month special at the 405 and just roll that out into this for 12 months. We'll just keep that same rate. So it's just another way to satisfy the legal requirement.
Seth?
I just have a couple questions. One is, whoever may be watching, I don't know if anybody is watching, but maybe somebody will watch later. Can you just kind of break down to them what collateralizing means and just like
Sure.
kind of speak in layman's terms, what that
So-
means and also what the benefit of us doing this is going to do for us and the people we're about to serve?
Yeah, so because they're public funds, because they're entrusted to the public entity, we need to make sure that, and this is again municipal law 10, that there's some type of ironclad financial instrument behind that that's going to back that up. In the off chance that the financial institution has issues and the municipality or public, whatever the public entity may be, that they have a way to get their funds back.
So you're saying if the bank was to go under, this is a way that we can retrieve?
Correct,
Okay, and that's the bank that we're particularly doing business with.
correct.
Okay, I needed that clarification. That's all.
No, and that's a great question. And again, I want everybody to understand that dynamic, that letter of credit or those securities are pledged to the municipality. So the letter of credit especially is a piece of paper in your hand, which says, it's irrevocable. It's on your terms. Now, you're only going to do that if you have a completely valid reason. And as I said, the bank is very strong. I mean, you can look at, we all file bank call reports every quarter. Quite frankly, we have no past due loans. So with, over 1,000 loan customers and, $420 million in loans. So, I could throw out some old school Kingston names like Ron Every and Dick Craig and guys who taught me how to lend, and I was very fortunate in my career to have people like that who taught me structure and how to do it well. So,
Yeah, this might be more a question for you or Andy. Does the city accept this new lock arrangement with
Yeah.
other deposit accounts, operating accounts?
So one of the things that we did was I was like, what is a new lock? Because I hadn't heard of it before. And so I talked to my comptroller, John Toohey, and said, do we do this? And he's like, yes, here's our procurement policy, it's our investment policy. And so it's listed as one of the 4 ways that we work with banks to be able to collateralize, work. So it is an accepted practice that the city.
Yeah, I just don't think it's on our investment policy, which we would just have to change if that's the route that you want to take. Because our investment policy has to reflect what we actually do.
Yeah.
But the city itself does this with its own longer term depositors.
Yeah, I don't know how many or which, I know we have M&T Bank for most of our banking needs. And so most of our stuff is in, cash accounts. And so I don't know how John handles that in our policy, but it is definitely an accepted practice.
Sounds to me like it's a better opportunity for us because what's insured right now, other than 250, is there a pass-through right now, Kevin, in the event with our, so currently we have $3 million with you. Is the same pass-through what we're going to use? I relate to my business like reinsurance. There's, I read in here, there's surety bond or something else. So do we have, are we being covered, collateralized right now by a pass-through?
Absolutely.
We are. Okay, so that's not an issue as far as what we currently have.
correct. Yeah, right now, well, any municipality that we have, every day, we get a report and make sure that they're covered, and we cover them. So this just, again, gives us more flexibility. We'd rather have money in loans than in securities. So again, if you look at, what kind of is happening in the industry. If you go too long on bonds, we don't, because we want that liquidity. But if you go too long and rates move against you, right, then you have these massive on-balance sheet unrealized losses, right? It's a very simple premise, back to my Series 7 days, as the guy said to us in the training. You don't need to know anything more than when rates go up, the value of bonds goes down, right? If I own a $100 bond at 2%, it pays $2. Rates go to 3, now I can take that same $100 and get $3. I'm going to pay you $98 for your bond, or 97, whatever that number is. So that dynamic is, and I don't want to get too far in the weeds, but again, I think it's important to understand why it's good for everybody to do this. It protects you folks, and it gives us a little more flexibility within our balance sheet.
So you can basically pledge that 3 million we have in trust with you, right? You can tell their loans, and you're
Correct.
giving us a letter of credit saying we guarantee this 3 million's here regardless if we pledged it or not.
Correct.
Can we, I don't know if we should ask questions in like an executive session regarding existing applications with business loans or, because we've been looking to maybe partner to be able to loan money,
We have a revolving loan fund, right?
Yes.
maybe we should table that and see.
Yeah, and I think we should just kind of stay on the ULOC topic for
Yeah,
now.
yeah.
Sal, do you have another question on that?
Yeah, I got two quick questions. One is, so the benefit of the bank is that the bank can now use this money to do what they want with. What's the benefit to us?
Well, I mean, I think it strengthens our bank, but it's business as usual for you folks. Really is.
Yeah, but it gives you something extra. Like the bank, and I'm just
Helps
being
the
very
bank.
technical.
It
The
gives us
bank is
more
getting something extra.
flexibility on our balance sheet. Yeah, we can do different things with that. That doesn't mean we're not going to invest in securities, but quite frankly, I think operationally for us, it's a little easier because we don't have to worry about collateralizing. We send it to Wilmington Trust, who is our custodian, and we tell them we have a municipal letter of credit covering this. And again, I think operationally for you folks, right, for your any of your stakeholders, but anybody who's looking at that part of the city or a part of this corporation is going to say, okay, fine, yep, that's covered you, and they move on.
But do we get any financial benefit? Like, do we get any points on it? Are we making money off? It seems like we're investing in the bank. We're actually making the bank more stronger, not more stronger, but stronger. And then we are getting a letter that says, hey, this is liquid for us. We can do this, but it's not necessarily getting us anything but the ability to do that, which if I'm wrong, correct me, but we can do that already because we already have the money in the bank.
Well, we're getting the interest on the CDs, right?
Okay, so we're leveraging the money that's in the CD.
I mean, what the bank does is it's either going to collateralize, the CD money with securities, or it's going to collateralize the CD money with this letter of credit, which freed up the bank to, like you said, reinvest the money as they see fit. The net effect is we're still getting the interest from the CDs, whether the bank does, whichever the 2 routes or 3 routes the bank goes, as far as what they do with those assets, securities, lending, whatever. We're still getting the interest from the CDs. We're still winning on that. And our deposits are guaranteed. And in the eyes of auditors and third parties, we're in compliance. So those are our wins.
Okay.
I mean, realistically, and it doesn't always happen this way, when a municipal relationship starts, this could all be, in other words, it could be, well, folks, this is what we can do. We can collateralize it with securities, or we can do this municipal letter of credit. They're both the same. So once you start along that path, it just becomes part of the arrangement, becomes part of the relationship. It doesn't always happen that way because I think quite frankly, there's a little bit of, what's a MULOC, right? And of course, we all love to throw around acronyms, that doesn't help. But even a municipal letter of credit, it's a somewhat arcane thing, and so you really, look at it, and when you look at the law and you realize that, Federal Home Loan Bank of New York is one who's issuing it and backing it up, it gives you comfort level. If we'd done that the first day we opened the accounts, it would be business as usual. And that, that's what I think we all want to get to.
But to Sal's original point, is there a premium you pay if somebody accepts a MULOC over?
Not
Yes.
typically, because it's really just the same, it's the same benefit to you. It allows the bank more flexibility, but I think we're paying a good rate on our products, and I'm only half kidding, but I'll stick to Steve's. I'm more than willing to talk, but I think we should stick to MULOCs. No, I'm kidding. I'm only kidding. I'm always willing, honestly, all kidding aside, I will come and talk and make sure that the relationship is solid and everybody's comfortable. I know we just opened those CDs, and I think that's probably
Yeah,
pretty good way.
in 11 months from now, we can then kind of have another
Exactly.
discussion about where that CD money is going and what rates we can get for
Right.
it and how that could,
And-
whether that.
And we need not wait
Yeah.
until, 10 and a half months, although.
And I don't believe, from my personal opinion, I don't believe we're taking on any more risk either way. Like you said with your example with the bonds, the bond and the interest rate environment we're in, where things are yo-yo right now. Your par value bonds are gonna go up and down. There's inherent risk in securities as well as any other, MULOC. So, for me, the net effect is we're still covered and we're still getting a very competitive rate on an 11-month CD and doing the right thing with our liquid money as opposed to where it was. I think it's a win-win-win all around.
And then the MULOC allows you guys to also lend to local businesses here in Kingston, County, right?
Correct.
So that kind of frees up money for you guys to continue to make those investments here. Like
Absolutely.
this, you guys are a local bank,
Yes.
so.
Okay, just to clarify, Kevin, I was reading here that we in essence don't get paid an interest rate on the MULOC. We get paid an interest rate on our investments that are, guaranteed by the MULOC.
Yep.
Okay, because in here it did say somewhere about, equal to current rates or something like that here. So,
We pay for the MULOC. We pay the home loan bank ourselves.
right, so it costs you.
We buy it for the benefit of the for the public funds for the entity. So it does cost us, but I'm okay with that.
And the interest is calculated, and the interest we're making on the CDs shows up in the letter of credit on every 90 days, or how does that work?
No, the letter of credit is just simply an arrangement between Federal Home Loan Bank, Catskill Hudson Bank, and KLDC, which says you have a letter of credit for X number of dollars.
Right. But
So,
the interest rate, the letter of credit limit should be going up as the interest accrues, right?
if you don't take the interest, yes. Understand, this is a good question, right? Because almost exclusively, we don't match dollar for dollar in the MULOC. So let me explain that, because this is really important. Right now, let's just use a general example. Somebody has $1 million with us, 250 is covered by FDIC. 750 would be covered by a security. We might take out a $500,000 MULOC. Okay, all that says is, we send to our custodian, XYZ has a $500,000 MULOC, 250 FDIC insurance. You now need to take a security. We better have a security to cover that additional 250. So we don't necessarily have to, and we probably wouldn't match dollar for dollar in the MULOC. But we would still have to cover any residual balance that isn't covered by FDIC.
Because they're laying it off on somebody else. You're basically saying,
sounds like
we'll take the middle
Principal.
and somebody else will take the
Future-
excess.
Correct.
And you're laying
What
that.
it sounds to me is that future interest earnings would not be. Otherwise, you'd have to keep.
They'd just be paid out.
That's up to
The interest
you.
is just gonna be paid out straight.
And that depends on how it's set up.
You can reinvest them and still cover.
If it gets reinvested, right, it still will get covered. Think about it this way, use another example, we're covering somebody with $3 million of securities, and we go out and buy a $2.5 million MULOC. We still have 500,000 in securities in balances that we need to cover, which we would then cover with a security.
Okay.
And plus any further interest that credits to it, you would then up that security limit to cover per diem.
Every day,
Okay, per
the
diem.
balance, yes.
But in that scenario, though, our liquidity would be limited to the amount of ULOC, right?
No,
Because of general municipal law, they still then have to cover securities that are still.
So some of it, but that's sort of liquid. Okay.
Yes.
right, and
Yeah, hybrid.
Hybrid.
Yeah.
when somebody asked me that recently,
It's fascinating.
whether, say we have a $4 million MULOC or whatever the number is, and, we try to maintain some type of contact with the public entity, because especially if we have a MULOC, we don't want to have a MULOC out there that we're paying for, and they're, well, no, we're going to buy a fire truck, we're going to do whatever, right? So we try to maintain that synergy in the relationship. It does not restrict you, and nor would, there be a huge uproar if you took 500,000 and you didn't tell us. It's your money, right? So it does not in any way put any restrictions on your liquidity or any restrictions on your account.
Anybody have any other questions for Kevin?
One last question. Would it make sense, and I'm just kind of talking to the group too, to put as much of our money into these things, under this as we could? Because it seems like it's guaranteed at that point, we can pull it back out. Like we've only put 1.5, we have 3, something like that. I'm using very vague.
So, right, so my understanding is that we've invested like 1.5 or so into CDs. The other 1.5 is more liquid for us, but having a municipal letter of credit really would cover all 3 million, and it would really be up to Catskill Hudson Bank to decide how much of that do they want to cover with a letter of credit and how much do they want to cover with regular securities. I guess we just give that by approving a letter of credit process with them, we then basically give them the flexibility as they need to change things and I don't think we get a say really on what you do. How much you decide to cover with the municipal letter of credit or otherwise, right? And so, but what I think I heard earlier is that in order for us to do this, we would need to amend our investment policy to probably add that section that, municipal letters of credit, are available, are an optional thing. I mean, I could actually, we could copy the language right from the city's investment policy if we wanted to.
I mean, there's no downside.
There's no downside.
So why would we do it? There's no downside. What Anthony, or, what Anthony was saying is that we need some liquidity, right?
Yeah, so on the front side, yeah. On the front side, CDs in 1.5, we want to keep, like Paul is saying, keep some liquidity for future lending, the future, to serve the community with immediately.
So we'll have liquidity and we have an investment. So we have two little portfolio, a little, mix of in our portfolio.
All right.
Steve, by the way, that was a very good synopsis of it.
It was.
Yeah, no, I
It really
mean,
was.
yeah,
Okay. Well, I appreciate your time today, Kevin.
My pleasure.
This was very helpful.
and anytime, I mean, as you know, I'm not far away, and next time I'll bring coffee and donuts.
All right.
Thank you, Steve.
Thanks,
Thank you.
Have a great day. Thanks.
Fascinating stuff.
Yeah. So do we want to just go over an investment policy? Does our governance, does the finance committee need to review it first?
Finance committee would review it first, and
Okay.
governance would look at it, and it would put forward.
Okay, great. So does that seem like that's a good course of action for us all to take at this point? Okay, great.
Do we need to review it separately, or can we?
We're here.
Make an agreement?
Yeah, I mean, the finance committee is
Finance
here.
committee's here, I mean, I don't have an issue with it.
I'm all for it. It's a publicly recognized and approved and accepted, way to collateralize municipal funds. Why wouldn't we be doing this?
As long as we can get it into our charter appropriately, or whatever we
The
call it.
wording though.
Yeah.
Susan,
Yeah.
So we can maybe use the wording, Steve, right, from another entity from the city, and then just, as long as we comply, I don't think any of us have an issue.
If we make a motion here to approve a draft or to vote on a draft of it as circulated by Mandy, can we leave that motion open and then vote electronically on it once it's circulated?
No,
You can't do
we
anything.
can't vote electronically, unfortunately.
Do we have a forum?
We do have form now.
So does the finance committee need to make a motion to the board to amend investment policy to include the option of ULOC? Do we need to do that?
Yeah, I think it would come out of the finance committee, so I mean, I think having you guys move it would be fine. I mean, I think in essence, I don't think having official finance, I mean, I don't think our board bylaws state that having items go through a committee is required. It's preferred, but I don't think it actually has to happen, similar to our, rules of the common council, like they don't, you guys have the flexibility, I think, in our
I'm
current.
not done right away.
Yeah, and so, I mean, I can read to you what the city's investment policy says. It's just a short paragraph. It basically says that for security deposits and investments, there are 4 different things that shall be secured by any one of the following. A pledge of eligible securities is one option. A pledge of pro rata portion of eligible securities is another option. An eligible surety bond is another option. And then an eligible letter of credit payable, in this case, the city of Kingston, in our case, would say payable to the Kingston Local Development Corporation as security for the payment of 140% of the aggregate amount of deposits and agreed upon interest, if any. An eligible letter of credit shall be an irrevocable letter of credit issued in favor of, in this case, the KLDC, for a term not to exceed 90 days by a qualified bank, other than the bank where the money is secured, which Kevin mentioned before. A qualified bank is either one whose commercial paper and other unsecured short-term debt obligations, or in the case of a bank, which is the principal subsidiary of holding company, whose holding company's commercial paper and other unsecured security debt obligations are rated in one of the 3 highest rating categories by at least one nationally recognized statistical rating organization, or one that is in compliance with applicable federal minimum risk-based capital requirements.
We already have that.
Great, and so then the 5th one is which is similar, but an irrevocable letter of credit issued in favor of a government by a federal home loan bank whose commercial paper and other unsecured short-term debt obligations are rated in the highest rating category by at least one nationally recognized statistical rating organization as a security for the payment of 100% of the aggregate amount of deposits and agreed upon interest, if any.
We already have that.
Great, so then we do have it.
So we do have.
Yeah, I sent you the about.
Yeah, but you just said it wasn't in there. So,
Well, so we had
It
updated.
didn't say MULOC.
okay.
I mean, I didn't know that a MULOC was.
Is irrevocable letter of credit.
I got a little worried when
So we're all set then.
40%.
Yeah.
Honestly, they don't even have to ask us, they could just do it.
Right.
But
Right.
Yeah, all right, so great, we have that in there. So then basically we would then just need a motion to allow us to enter into a letter of irrevocable letter of credit or MULOC.
Guess I'll make the motion.
All right, Eleni, do I have a second? Tony, all in favor? Aye. Okay, great, all passed. All right, thank you all very much for that.
Great questions, guys. Good,
Yes.
great questions, Sal. Way to keep it 5th grade. As far as like, man, seriously, that's great stuff.
Especially now with all the banking stuff. I will just say that we started this conversation prior to the meltdown of the bank out on the West Coast. Right? So-
That was actually another one of my questions,
Yeah.
was this man standing here because of what happened on Monday?
No, nothing. This was pre-planned. We started talking about this a while ago, so.
Good timing.
Yes. All right, so up next, on our agenda, we're gonna go back to, the treasurer's report. And so we're gonna, Tony had sent out, thank you, Tony.
Yeah.
Sending out in advance, both, a whole bunch of documents. So I hope everyone had a chance to review, but we'll go through them briefly now.
Yes, sorry for the 4 attachments. I try to keep it as simple as I possibly can, but this is my first go around with this. Just real quick, I'm gonna just read right off the treasury report that I already forwarded you regarding loan information. As of the end of February, we still have 10 loans outstanding, principal balance of $342,002. We still do have that one non-performing loan with the balance of $32,952.10. We've discussed that in the past. That is in the process of litigation and getting that cleaned up. Deposit balance information, again, overall deposit balance, very, very consistent with last month. I did send the separate attachment with the spreadsheet. You can see the individual balances in those accounts, again, as of the last day of February. Things have shifted since then. Per the second bullet point, Mandy has opened all previously discussed 11-month CDs at Castle Hudson Bank. In total, we've opened 4 CDs, which Kevin just talked about prior, with a total value of $1.5 million. All the documents have been executed by Mayor Noble and Mandy. Hard copies are securely located at the KLDC office. So those are done. So now our money is working for us. Again, as we just discussed, Sal, we did invest $1.5 million in CDs, getting a little over 4% for 11 months. The rest of that monies are staying liquid. And why are we keeping that liquid at a lower interest rate? So we can serve the community and lend, when applications do come through. We don't want to lock ourselves into a corner with that. New business.
So Tony, sorry, so the Catskill account is 108 account or something totally separate?
Hang on. So all these accounts are at Catskill. If you're looking at the spreadsheet, these are the deposit balances based at the end of February.
Okay.
When you look at this again next month, you're going to see 4 new accounts with the CD money in it. So these monies are still reported as in the checking accounts with what you're seeing currently.
All right.
We don't have statements, we don't have balances yet, so that's why I did not include it in this month's, because it was based as of the end of February. So it is a little confusing. You will see 4 extra accounts with the CD monies in it on next month's breakdown. Okay, hopefully that answered your question. If not, my apologies. We continue to review the new loan application we have. We have insisted on some traditional bank involvement. Whether it's an approved application or a declination letter, we do want to have our potential borrowers going through a traditional financial institution because they can underwrite. And they have staffs and they do that and that's what they do. 24/7 is what they do. And this particular board might not do that 24/7. So we are insisting on that. We are hoping to partner with the county to offset some of this risk, and they have taken the same stance. They would like to see some traditional bank involvement as well. Finance committee did meet over the last month and we discussed raising the RLF. Basically, when that loan program was introduced, it was how many years ago? 20?
Yeah,
20 plus years ago, and our lending limits reflected that. So the finance committee met and we discussed upping those limits to a $250,000 cap or 25% of the project cost. So with the price of eggs, nothing is going down, including lending. So we feel that we need to up that limit to again, better serve the community. The audit has been forwarded to each of these as well. There was no major items to review. If you have any questions, just let us know. That was also attached to the email I sent out the other day. That is the treasurer's report.
Does anyone have any questions on the treasurer's report?
I have some questions, but it's around like what we do with the defaulted loan and how we handle that kind of before and after. So I don't know if that happens here or if that's a different conversation.
that loan defaulted several years ago. It should have been written off last year and it wasn't. So it's being written off, or it should have been written off in 2021. So it's being written off in 2022.
Yeah.
Okay.
But generally, Sal, what we do is we work with our counsel to, file all of the necessary legal documents and liens. And we usually then go through court processes until we have some sort of judgment. So we have a judgment on there. So that's generally how we would, go after someone who's unpaid. First, we'd start with letters and then we would move to court stuff. And then in this case, we then end up with a lien or a judgment. And then we just wait to collect someday. Sometimes we don't. And that's why we have to write them off because, we've had others in the past that we've written off, but then in the end, it ended up being able to collect on, at least partially.
And if that happens, it comes back with bad debt recovery.
Is there, I mean, and I know this may sound silly, but is there any kind of program or ideas that we could put in place that would kind of give people tools or resources or something so that they don't default, and if they are in default, that they don't have to go through this icky legal process that leaves them in a even a worse situation than they were to begin with? And I'm trying to take the kind of side of the middle, or even the person who borrowed the money, because my guess is, or my hope is, that people aren't just defaulting because they're saying, F the KLDC and we're not going to pay you, but that there something happened and they can't pay back the loan. And so I appreciate all the technical stuff that we have to do, but at the same time, I feel like our hope is to help people, not to necessarily leave them in a worse position than they were. And I know that we're trying to help them by lending that money, but I've certainly lent people money that they didn't do the right thing with, and they were in a worse position. So maybe part of our charter could be like the education of how to handle those funds or do something with that, or whatever, rather than just the pure business transaction of, we're going to lend you money, hopefully you pay us back. If not, we're going to start litigation and go through that process.
The litigation doesn't happen right away. I mean,
No, I understand that. I totally understand that. Yeah, I just
never paid one dime. They took it out 12 years ago and didn't pay one dime.
I'm not necessarily worried about them. I don't want to use the one person who might be an outlier as the example. I just mean our practices in general and how we lend and how we might be different from a bank.
Yeah, I would say that, one of the things that we do, Sal, and I think one of the things that Mandy has done really well is that she, for folks who have gotten either behind on their loans or who have struggled, she's worked with them to be able to, get into, one, understand what's going on, what are the issues that they're facing, how can we get back on track, do they need a payment plan, do they need to extend their loan longer? And so we've been able to, and I think that's, we haven't loaned a lot in the last 10 years. And we've been, but I think we had some, during some of the COVID loans that we gave out, we had some folks who maybe struggled a little bit in the beginning because they really did struggle to pay back within the, we started them a few months or afterwards, I think. And some people struggled with that, and, we worked with them. So I think that that's kind of the difference between us and the bank, is that we actually have staff that are, we don't have like a really, and I'm sure banks too now are maybe a little bit more flexible, but, we do have someone at least willing to work with them. And I think our board, is also more in touch with what's happening on the ground. And if someone's really having an issue, like, our board can amend things, change things, and much easier than, say, a bank could change their lending and protocols and policies. So.
Yeah, Sal, as somebody who's been on the board for 10, 15 years, I would say we are very generous and understanding in terms of being able to, in these workout loan situations where somebody's not performing, I think we've been very, very good with people in terms of trying to work out solutions.
Thank you.
So did I do a motion to accept the treasurer's report already? No, let's do it. All right, do I have a motion? Hayes first. Okay, Sal second. Okay. All in favor?
Aye.
All right.
I just want to say for the record too, it's very impressive. Tony, how quickly you've got the speed on this.
Yeah.
I saw kind of a recommendation out of.
Yeah, so it's, are we gonna make we discussed bringing up the RLF loan. I just mentioned the treasurer's report. The recommendation on from the finance committee is that we up that loan limit to $250,000 as a cap, or not to exceed 25% of the total project cost. This is up from $50,000 that it is currently.
But no. Well, yes and no, I'm sorry. So we're still gonna have the RLF, the CDRLF and the KRLF, which are maxed out at 50. We can't change that. We're gonna use the other funds that we have and make those the maximum of 250 if that's what everybody agrees with. But we'll still have the two that are the 50 capped. Does that make sense?
But we could change those legally, right?
I don't know that. These were HUD funds.
Oh, they were?
Yeah.
Oh. Are they still HUD funds?
Yep.
Do we have to go through what?
Yeah, we'll,
No, not for the small ones, so what we're.
We'll just leave those alone.
we'll do that, we'll figure that out. All right, so we'll do, so that, and so one of the things we talked about was actually, we have an account in our balance sheet called 108, but we don't actually have any 108 funds in that account anymore, and so it's labeled incorrectly, so I think we're gonna change the label of that to then be this new loan program. So on the balance sheet where it says 108,
It'll just say KLDC RLF.
yeah. And so then, yes. All right, so we have a motion to accept the treasurer's, or finance committee's, recommendation to, create a $250,000 cap with, and 25% max. That pays, okay, do I have a second? Sal, all right, all in favor? Aye, any opposed? Okay, great.
Thank you for clarifying, guys. I'm sorry, I got
Yeah.
the verbiage mixed up there.
Well, I think it's good for us to clarify too,
Yeah.
eventually for those other loan funds to see if HUD has any flexibility on that, because $50,000 is still a very small amount of money.
What is the account gonna be called?
KLDC RLF.
All right, do we need a motion to accept the auditor's report? Okay,
The audit is separate from the treasurer's report.
right, yes. And so as Tony mentioned, there were no findings in the audit. I want to just thank Mandy for all of her work with our auditors. I think it worked.
Good job.
It was relatively smooth.
It was.
And they seem like they were a good hire, so
Yeah.
I'm glad that we found new auditors. And it seems like, they're very happy with all the bookkeeping and all the work that's been done by Mandy and the office. And so with that, does anyone have any questions or anything?
I think it's just important to note that the auditor's letter, that it called out no issues.
Also on there, just so everybody knows, they mentioned that last payment of the 19,951. The DOT 2 weeks ago cashed the check that they've had since October. So it shows up in the financials, but it's not there. You know what I mean? Like it's there because the check wasn't cashed. but
Right.
It's been taken care of, so we no longer owe the DOT anything.
They sat on it.
For a really long time.
So we had a turnover of staff.
That's never happened to anybody, else, right?
All right, well, so then I guess I would ask for a motion to approve the audit as presented.
Yeah.
Tony?
Yeah.
Lenny, second, all in favor?
Aye.
Aye, any opposed? Okay. So I think that those were our motions for today.
Do we have minutes?
We do have minutes. I think those were sent out. Did anyone have any correction or changes to the minutes? If not,
Make a motion to approve the minutes from the last meeting.
okay. All right, all in favor? Aye, any opposed?
I'm sorry, who did the second?
I just, sorry.
Did you want to go into executive session to discuss that application really quickly?
We can, and then we can come back in and, Sal, we'll have to call you.
Email me your phone number.
Yep, I'll email you right now,
Okay, thank you.
for sure.
All right, so could I have a motion to go into executive session to discuss the loan application project on Broadway?
So,
Paul, do I have a second? Tony, all in favor? Aye. All right, we'll be in executive session.
you. Yeah, that's good. You would all hold me. I like that machine, by the way.
so we are back. Can I have a motion to enter out of executive session?
So moved.
Thank you, Hayes. Second, Sal. All right, all in favor? Aye. Any opposed? All right, so we've got no business coming out of executive session at this point. And so with that, I think that that's everything that we had on our agenda today, right, Mandy?
Yes.
We're good? Okay, so nothing else, I'll ask for a motion to adjourn.
So
Wait, one thing. Oh,
So,
I would, my good of the order is I would just love for us to come up with a business plan. I would literally love for, like, I feel like we're a business and we're not quite sure how to conduct business and we wait for people to come to us. And I, like, if we're going to keep money liquid and like have it ready to lend, I feel like we should be, and again, I'm new here, right? I'm 3 months into the game. So I'm not trying to insult anybody or step on toes or anything, but that we need a real plan to go out and do these things, or everything we're doing is just speculative.
Yeah, agreed. And so maybe, I don't know if we could maybe have a meeting of the finance committee, or maybe we need actually like a marketing working group. Or we need like a strategy working group that could be just kind of a little bit of a task force that's maybe not an unofficial committee, and we could meet some other time between now and the next meeting and we could open it up to the board to see who would be interested in just stopping in. And I think that's a good idea, Sal. So why don't we'll put that in the notes of to do, is that for us to send out an email to see who would like to be on that working group, to see about putting that strategy together. I mean, we can also send out the flyers, we can talk about what we want to do with that, we talk about how we want to market and promote, and is our priority loaning at this point? Is our priority the business park? Is it, a little bit of each? I think it'd be good. That's a good discussion for us to have.
and again, a component of it needs to be a marketing plan around how we get the word out.
Absolutely.
Yeah.
Great.
That's a great idea.
So we'll get 3 or 4 of us together, and see if we can get that going. So.
All right. Now I second the motion to adjourn.
Okay, great. Thank you. All in favor?
Aye.
All right. Thank you, everybody. Have a great day.
Thank you, everyone.